A very good afternoon, candidates. In today's class, we're going to be looking at question number 4, which is macroeconomics and economic pursuits. So what you see on the screen, you see that I have question on the left and on the right, I have the marking guidelines. So we'll go together on the question and then we'll see what we have on the marking guidelines to assist you to prepare you for your trials as well as the main examination. Question number 4.1 says answer the following question. So we need to answer the question that follows. Let me change the color maybe to red today. So we need to answer the question that follows, and we have two questions that we need to answer. So when we look at 4.1.1, name two effects of international trade. So what are the two effects of the international trade? As you're required to provide two, each effect will have 1 mark, and the total of 2 mark is available for the candidate. Now let us look and see on the solution, what are those effects? If you look at the solution, you are given more than 2. In this case, you have a total of 4. However, in the exam room, you are expected to only provide the 2 that you have been asked to provide. Now, what you would have selected, you would have decided whether you want to say specialization, mass production or large-scale production or economic growth, efficiency or competition or globalization. Whatever that you will be recalling from the class, it is what you are expected to respond with in the paper. Again, only 2 effects of international trade that you will be expected to respond with. In my case, I will choose specialization as well as mass production, and the rest I wouldn't select because only 2 is required for you to pass or to get a total of 2 marks for this question. Question number 4.1.2. How do consumers in the importing country benefit from dumping? So how do consumers in the importing country benefit from dumping? So you recall from our previous class what is dumping, or you recall from the class what is dumping. Now let us look and see what are the benefits that me and you as consumers are we benefiting from the dumping. Consumer will pay lower prices for imported goods. So what is the main benefits is that the consumer will pay lower prices. The example will be when you decide to buy your products from Shein as opposed to going to buy from Woolworths. The expectation is that whatever that you would have paid to get this products or whatever products that you want from Woolworths will be higher compared to what you pay if you are going to buy from Shein. So basically, dumping is when the exporting country is able to sell to the local economy, to the local country at a price lower than what the consumers would have paid should they be buying from other local manufacturer or local sellers in the country. Now we're done with 4.1, we'll move to 4.2. In 4.2, we need to study the extract and answer the question that follows. So in the extract below, we have South African balance of payment second quarter for 2019. So this question will be focusing on the balance of payment. The balance of payment consists of current account, capital transfers, and the financial accounts. So that what is making up the balance of payment. It is what we call current account, the capital transfers, as well as the financial accounts. South Africa's trade balance switched from a surplus of 41.9 billion in the first quarter of 2019 and a deficit of 27.2 billion in the second quarter, right? The deterioration in the trade balance came about as the value of the merchandise imports increased substantially. This has impacted the terms of trade. So what do we see here when we're looking at the balance of payments for the 2019 financial year? We are told that we were sitting in the surplus of 41.9 billion in the first quarter of 2019. However, when we moved to the second quarter, we then switched to deficit. So what happened in the first quarter that did not happen in the second quarter. So basically, if the import increased, we are going to have more import as opposed to export. In that situation, we'll find ourselves in a deficit. However, if we have more export as opposed to import, we'll find the country and the surplus, right? So what basically happened then in the second quarter is that there was an increase in the import. So the import of many of merchandises increased substantially. This has impacted obviously the terms of trade, as I've already stated. 4.2.1 identify the account in the balance of payment that records export and import of goods and services, right? So you need to identify. So when we talk about identifying, I've already stated in other videos that when you are identifying something, it means it will come from the extracts above that you've already looked at. So once you know that the information will come from the extract above, then the answer, you know for sure it will be something that is coming from the above. Now let us look what we have in the answer. When you're looking at the answer, we have current account, and then when you're looking at the extract, here is the current account. So now when they say identify accounts in the balance of payment that records export and import of goods and services, it is a current account. Now, 4.2.2, which commodity is recorded as a separate export item in the financial Africa balance of payment? So, which commodity is recorded as a separate export item, as a separate export item in the South African balance of payments? So that you need to record from the class. It is not going to come from the extract, but it's something that you learned in class, and then this time you need to talk about, and you need to respond based on the understanding of what your teacher in class have taught you. So now the correct answer, it is gold. It is gold because gold is one of the commodity that is recorded as a separate export item in South Africa. 4.2.3, briefly describe the terms of trade. Again, candidates, in this case, when you need to describe something, it has to be something that you learned in class and you recall from the classroom. It will not be something that you see in extracts, but it's something that is relevant and in line of the information provided in the extract. However, it might not be something that you get from the extract below. Now let us look at what we have in the solution. Terms of trade expresses a country's ratio of export prices in terms of its import prices. So the terms of trade, it expresses the ratio of export prices in terms of import prices. So we're looking at the ratios of import when compared to the export, right? So that is the terms of trade. 4.2.4 explain the impacts of an increase in the export price in South African balance of trade. So what happens if the price of export increase? How does that affect the balance of trade? And now let's see what we have. The export earning of the value of the total export would increase, resulting in an increase in the value of the trade balance. Demand for export will decrease, reducing the volume of export and the trade balance. So what are we saying here? If we're increasing the price of what we're exporting to, for example, Europe, the Europe will pay more for what they will usually pay less for. Let's say now for the glasses, if you're exporting the glasses to Europe, they were paying 1,000 rand, but now we are making the pack of glass to be 1,500. Yes, the earnings or the total value of export that we've exported will increase because of that extra 500 rand. However, we need to take into account that even though there is that increase in the total value of the earning that the country will make, but there will be a disadvantage that comes with that, in that there will be a decrease in the overall demand of the export. So there will be increase in earning for the export. We're expecting that the earning will be more because of that extra 500. However, they will not buy more item as they used to. Let's say in the past they would buy 100, but now because of the increase in the price, they might say they want to buy 70. So that what will be the impact rather of the increase in the export price for the South African trade of balance. 4.2.5, how can the import control be used to correct the balance of payment? So now we're looking at the import. Then what will we do with the import in order to control or correct the balance of payments? So in the balance of payment that we see here, we are currently in the deficit. So if we are in the deficit, it means that we've imported substantially more than what we've exported. So now the question that comes in 4.2.5 is, how do we correct that? How do we ensure that that export that we have, it is reduced so that the balance of payment will go back to surplus, which is what it was in the first quarter of 2009. Now let us see what are the remedies or what can be used to ensure that is corrected. The balance of payment deficit can be corrected by imposing import tariffs, right? And import quotas. So what does that mean? It simply means that now we need to say, okay, for every import that we are receiving, we need to put in the tariff tax. So if there is a tariffs, it would discourage the people that are importing certain products to the countries because they'll need to pay additional to what they've bought. That means they need to pay tax in addition to what they are buying. So in that instance, they will be discouraged to buy as much product as they want, and also import quotas. So when we're talking about import quotas, means that there is a limit in terms of what we can get for certain products in South Africa. Let's say, for example, there's a limit in terms of the cars that can come from China to South Africa. So by limiting that, it putting us to the position where we are controlling the import. By controlling that import, then the consumers in South Africa will then be forced to go and buy from other products, from other companies rather, in South Africa. Import tariffs makes import goods more expensive, thereby discouraging local market from buying from them. So as I've already stated, this will discourage the local market from buying from the foreign market. Import quota limits the amount or the quantity of input allowed to the economy. So the quotas obviously limit the quantity, as I've already stated. So now you see, first you are talking about what will be done. It's by imposing the tariffs as well as the import quotas. And then in addition to doing that, what are those tariffs and what are those quotas? When you're talking about quotas, it will reduce the quantity that can enter the country for certain products. And when we're talking about on the other side, the tariffs will discourage people to buy from the external markets as it will become more expensive for them. So, what is important for you to realize here? Candidate was expected to provide two ways, and then each way provided by the candidate to control the import was going to get 2 marks, or rather, is going to get 2 marks provided that you are writing this paper and you see question of similar nature. That'll take us to the end of this part, and then we are going to move to 4.3. So what are we supposed to do in 4.3? When you look at 4.3, we need to start with the cartoon below and answer the question that follows. So in order for you to effectively respond to the question, you are supposed as a candidate to understand what is going on in the cartoon, and all the questions that will follow will be relevant or in line with what you'll see in the cartoon, right? Now let's just look and see what we have in the cartoon. We have our credit rating agencies and a bigger eraser. I need a sharp pencil for this task. Zero-based budgeting. And then what we see here, we can see raising debt, resistance onions, wage bills, hindering deficit, and then failing revenue. Right. So now that you see this, we need to look at the questions. And the questions you'll be asked to identify, you'll be asked to briefly describe, you need to name and also explain. And that will only happen if you understand what is happening here in the diagram, because all the questions that will follow will be in line with what we see in the diagram above. Now, when we're looking at 4.3.1, which government department is responsible for budgeting? So this question means you need to recall from what you've learned in class, because everything that you see here, it is in line with what you would have learned in class. It is not going to come here, but it's something that you will have to recall from the class. And the department that is responsible for budgeting, it is the Department of Finance. You know that in February, when in South Africa we are tabling the finance, it is the Minister of Finance that present the budgets. Therefore, it is the minister's department that is responsible for for the for the work, or rather, must I say, for budgeting for the country. Name one factor that contributed to the downgrading of South African economy. So what are this one factor that is contributed to downgrading of South African economy, right? There are many factors that are responsible to the contribution of downgrading of South African economy. However, in this question, the candidate is expected to provide only one. Please do not try to impress the examiner by providing more than one, because you will be given only one mark, even if you provide 2 or 10 or 50, right? However, at the end of the day, you're only going to get one. So for that reason, candidates, it is very important that you read the question and understand what is required of you. If you're required to provide one, please just provide one. Do not go further and try to provide more than one, because by doing so, it's not going to earn you any extra mark. However, you'll be wasting the time that you need to save and allocate for other sections of the paper. So, what are then those factors that are responsible for downgrading South African economy? It is raising debt, right? And you can see from what we see here. So those factors are also showing here: the failing of revenue and the widening of deficit, corruption, low GDP growth, high unemployment, power shortage, poor investors' confidence. So now let us summarize these things that are contributing to downgrading of South Africa and understand why do we have them. If South Africa go out and borrow money, they need to pay back that money using the revenue that they have collected, right? And they also need to pay interest extra or above what they would have received from other countries when they were raising this debt. So by doing so, they are downgrading the South African economy, because they need to take that revenue they've collected from the business and the individual and use it to pay debt back with interest. Failing revenue. So in South Africa, the government is also making money, and is they making money in different ways, right? They are providing some services, and also in addition to that, they're also collecting revenue. So if the revenue they're collecting from SARS goes down because people do not have money, so there's no VAT collected, there's no pay as you earn collected, or there's a reduction pay as you earn collected, and also when we realize that there's a reduction in the tax paid by the companies, it will result into the failing of the revenue of the country, and that result to downgrading of South African economy. Widening deficit. So what does it mean? We are exporting less and importing more. The corruption, it also affects the economy, South African economy, or downgrading the South African economy, because if people are corrupt, it means they are getting the tenders, but subsequent to receiving those tenders, they are not providing the services they are owed to provide to improve the state of SA economy. The low GDP growth, if the GDP is moving low because of other external factors, which could be unemployment and the consumption, or linked to obviously failing revenue and raising debt, that affects our GDP. If that affects the GDP of the country, so what does that mean for the country? It simply means that we are going to have an issues in our economy, high unemployment. So what does high unemployment means? It means people do not have money. If they do not have money because they're not getting salary, they are not going to be paying PYE. They're not going to be paying for VAT because they're not going to be buying a lot of products. And also subsequently, If that is happening, it simply means that the employers, they're not going to be collecting a lot of pay as you earn money to pay over to SARS, because the unemployment, it means that fewer people are employed as the country would wish that they are. And then we move into power shortages. How is power shortage find putting us in the position where we are saying it contributed to downgrading of the South African economy? So when we're looking at the power shortages, what is it doing? Or is that the companies that uses power mainly to produce the products or services, they will not be able to produce sufficient products that they wish, because now there will be times where there's no power. So that will affect obviously the country as well. Poor investors' confidence. If the investors are not investing into the SA economy, SA government, that's also has some contribution to downgrading of the South African economy. So that was me summarizing for you. How do we find all this information being part of the solution for 4.3.2? It's because of the reason that I have explained. So now you are a candidate responding to this question. What you would have selected any of what we have here. In my case, I will just select raising rising debt, right? And you can see all this information you can get from here: the filling of revenue, widening deficit, wage bills, resistant unions, and raising debt. So those are the factors that contribute to the downgrading of South African economy. So the answer you would have picked from here by just choosing one of what you have from the cartoon above. Then 4.3.3 briefly describe the term affirmative action. So what is affirmative action in your own understanding, so that you would have learned from class? And this is the time for you to show that when the teacher was teaching you in the class, you did understand the affirmative action. And by describing, because you're not stating or naming, you will get 2 marks, because it is basically you explaining the term affirmative action. So, the affirmative action is a policy that seeks to redress past discrimination through active measures to ensure equal opportunity as in education and employment. So, what is the affirmative action? How is it implemented? Just to make you understand. So, affirmative action are things that says, for example, the employment in certain field will be provided or be given to previously disadvantaged people. So that tries to redress the past discrimination through measures. So what will be those measures? To say, now in order to employ more reporting accountant, we need to ensure that we are employing people that didn't have equal opportunity in the past. That is, will be the colored or will be South African. And also it could be through education. So you'll find some bursaries like Tutuga, they'll say they need people who are part of previously disadvantaged group. So that is an affirmative action by Tutuga to ensure that people were not able to study in the past, they are now able to study, because the advantage will be given to them. So that is basically what we call affirmative action. What impact will South Africa's credit rating to junk status have on the economy? What impact will South African credit rating to junk status have on the economy? So now we are looking at the junk status and the effect it has on the SA economy. This question again, candidates, you only expected to provide one impact, only one impact that credit rating will have on South African economy. However, obviously, if you're looking at the solution, you see that we have a total of 4. And the reason we have a total of 4, it is because any of those 4 will put you in the position where you get a cluster 1, and then you get a total of 2 marks by just naming one impact. Now let us see what the impacts that we have here and then summarize for the better understanding of us. Government will have to pay more interest, which leaves less money for service like health and education and investment in infrastructure. So now what is it being said here? If South Africa moves to junk status because of their credit rating, it means when they go out and borrow money, they'll pay more on interest. And what does that mean if South Africa is paying more on interest? It simply means that the extra interest that is paid out, that money would have been used by government on other services like your healthcare, your education, as well as infrastructure like road. But now that money will not be available because it has to be used to pay for extra interest because the country is now sitting on the junk status or they have a bad credit rating. So that is the issues that more interest will be paid because of the credit rating of the country. Government will need more money to cover its basic expenses. Obviously, we need to collect more money in order to ensure that the expenses of the country are covered because the additional money would have been used to cover an extra interest. Downgrading may lead to increased taxes. So now what does that mean for taxes? It means that the government now, because their major part of their revenue is through taxes, in order to ensure that they are able to cover their expenses that include also the additional interest, they will have to find additional ways to collect more taxes. And by doing that, they will have to go and increase the taxes, thereby increasing the revenue of the country. This investment may occur, which lead to low economic growth and increased level of unemployment. Right. So now these are part of the things that you would have said. If I were you and I wrote this paper, I would just select and say government will pay more interest, which leaves less money available for other services. And I would say investment infrastructure, healthcare, and education. And just by stating this one point, you would have gotten yourself 2 marks for 4.3.4. Now let's just look at the question that follows. At 4.3.5, how could state-owned enterprises contribute towards expanding the economy? So how will the state-owned enterprises contribute towards expanding economy? Let me just give you an example of the state-owned enterprises that we have in South Africa. For example, we have Eskom. Eskom is one of the SOEs that we have in the country. And then we also have Transnet, and it's also one of the SOEs. So what is Eskom doing? They are provider of the energy or electricity. And what the Transnet is doing, they provide the rail transports, that part of the things that they are doing, and also they are also functioning in the water transport, right? So those are example of the state-owned enterprises that we have now. How do they contribute in the expanding of the economy? Now let's just look at the solution that we have so that we ensure that we have understand how or what is the contribution. Creating more jobs opportunities and appointing competent management, right? So how could bangenza njani indlela abangayenza to ensure that they are contributing towards the economy? So they can contribute that by appointing competent management, right? And give job opportunities to people that have skills and expertise in the industry so that the revenue they collect is done correctly and accordingly. Offering skills development program to improve productivity of existing workers. So what else they can do? Those employees that they already have at the system, they will need to ensure that they are equipped or correctly trained so that they can do their work very well, effectively, and efficiently. So they will need to offer the skills development program to improve productivity of the existing workers. Maintaining or servicing their machinery and equipment regularly to ensure quality service delivery. You will know that if you have new machine, this is when you have old machine, at that time that it will take you to complete any job or task, it will be quicker with a new machine as opposed to the old machine. So by ensuring that the state-owned entities, they are servicing the machinery and equipment regularly to ensure the quality service delivery. So that will ensure the quality service delivery if they are regularly renewing their machinery and dealing with corruption to reduce wastage of public funds. So you know that mainly in this SO is the number of corruption that result to us finding ourselves that we do not get the service we require that the state-owned entities are producing. Now let's just make an example with electricity. For example, when we're talking of the electricity, so the electricity, as I've already stated, is that it's one of the example of what is produced by the state-owned entities. So now by them having corruption taking place in the organization, it means that we will have electricity that is more expensive and electricity might not be produced in time, which means that the corruption is also an effect in ensuring that the savers, or ensuring that the economy is expanding through the state-owned entity. So we are expecting that if they reduce in corruption, that will be good for the economy. Now we are done with 4.3. Now we're going to look at 4.4. Briefly discuss extrapolation and amplitude as features in the forecasting of business cycle. So this you need to recall from the class. If unfortunately you've forgotten what is extrapolation and amplitude, you will have a challenge in explaining what are the features in the forecasting of the business cycle. Now let's just look and see what we have in the solution and also expand as we go through. So first we look at extrapolation. Forecasters use past data, which trends, and by assuming that this trend will continue, they make prediction about the future. So how does the forecast work? They use information of the things that happened in the past and make assumptions that whatever happened in the past might happen in the future, right? So for example, if in the past, in order to produce 100 kilowatts, the resources that they needed, they were worth 100,000. The expectation is that the resources they will need in the future, it will worth 100,000. However, they need to consider the inflation. So they will say 100,000 plus the impacts of inflation. So that's how then they use extrapolation. Number two, something unknown is estimated from the fit of the information that are known. Right. Something unknown is estimated from the fit of the information that are known. So now the information that is unknown, which is obviously the future, will be estimated using the known information, which is the past data that we have available. If it becomes clear that the business cycle has passes through rough and has entered a boom phase, forecasters might predict that the economy will grow in months that follows. Right. So now let's make assumption that the economy was going through hardships, the inflation was high, unemployment was high, and all of that. So if the country was going through tough times, the predictors or the forecasters will make assumption that now the economy is about to recover. And then when you move down, it is also used to make economic predictions such as future share prices. Right? So also, if the prediction about future prices is made, what the forecasters will do, they'll say the share price of this company has been increasing by 1% in the past. So the assumption is that it will continue to grow by 1% as the time goes on, right? So now the prediction also can be made regarding the share prices. Now that we have looked at this, or we've looked at extrapolation, I then want us to look at amplitude, right? So candidates need to be aware that a maximum of 4 marks is available for extrapolation and another 4 marks will be for amplitude, right? So in that case, or with that being said, the candidate is expected to only provide 2 points. So the other points is for the benefit of the markers and for the benefit of you understanding more about extrapolation. So extrapolation is basically using the past information in order to come up with the future or what will happen in the future based on the information that is available at current. Now let us look at amplitude. The difference between the total output between the peak and the through, right? So when you're talking about amplitude and the forecasting, so you're looking at what's the difference between the highest point and the lowest point, right? So that determines the total output. And then measure the distance of the oscillation of the variable from the trend line, right? The intensity or height of the up upwings and downwing concentration and expansion in the economy activity or in the economic activity. So here we're looking at upwings and downwings, and here we're looking at peak and through, right? And then here we're looking at oscillation. A large amplitude during the upwings indicates strong underlying forces which result in longer cycles, right? So looking at the amplitude during the upwing time, a larger amplitude, the more extreme the changes that may occur, extent changes. During the upwings, inflation may increase from 5% to 10%, a 100% increase. So that obviously the explanation of the extrapolation and amplitude in discussing the features of forecasting of the business cycle. So when you're looking at this one, you're looking at the past trends, and then you're looking at this one, you're looking at the graphs. So you're mainly looking at it in line with the graphs. Now we're going to look at the last one, which is 4.5, evaluate the impact of depreciating rents on the South African economy. So what is the impact of the depreciating rand in the SA economy? So if someone comes and say to you, the rand has depreciated, so what are the impacts? So now you need to describe that. That will be obviously in line with what you've studied in class and the things that you normally hear in the news, because economy is more about things that you'd hear in the news. Now you need to address them here in the exam. This is made up of 8 marks. So you know that when you're talking about 8 marks in line with evaluation, each component or each statement that you provide, it is going to earn your candidate a total of 2 marks. Therefore, you're expected to provide a maximum of 4 points. Now let's just see what we have. Depreciating of rand will positively affect the South African economy in the following ways, right? Export will become relatively cheaper, thus leading to increased demand for South African goods. If the rand is depreciating, any country will like to purchase from us because the prices will be lower for them. Demand of South African exports such as base metals and mineral products will increase as they become relatively cheaper. As I've already stated, the export will become cheaper, and therefore the foreign market will want to buy from us because the products will be cheaper. And then we're looking at the third one. It says foreign tourist arrivals will increase because it will be cheaper from them to spend money in South Africa. So think about, you are a US citizen and you see that the rand has depreciated. It means you need less dollars to spend in South Africa than you would during the time when the rand is appreciating. Improvement in trade balance as export will be greater than the import. So the trade-off balance also, or the BOP, will improve or will have surplus because we'll be making more export as opposed to import. Why are we making more export? Because more people will be buying, and the reason that we'll be buying, it is on the basis or on the ground of the fact that our products will be cheaper during that period. So in overall, what are we looking at? We're looking at that the export will relatively be cheaper, and if the export is relatively cheaper, more people will buy, so the demand of export will increase, and also the foreign will want to come to South Africa because it will be cheaper for them to buy anything they want to buy here. Also, in terms of them renting the space or accommodation during their stay, it will be cheaper. Improvement in the trade of balance. Also, when you look at the trade of balance, the fact that the export will be going up, therefore the import will be less because we wouldn't want to buy in the foreign markets when we are at the stage where it will be more expensive to buy in the foreign market. So there will be more people from foreign market buying from South Africa, but there will be less in our local market buying outside the country. Then we need to take into account that depreciating of rand has negative impacts in our economy. So what are those negative impacts that this has in our economy? So import production or imported production inputs such as crude oil and vehicle part will become expensive. Fueling cost cause push inflation. So what does that mean? At the end of the day, we need to understand that either we like it or not, South Africa is not producing everything. Because we are not producing everything, some of the products will need to import from other countries. And by doing that, if we go out and import from other countries, it simply means that we have to understand that it will be expensive for those imported goods, right? And if it is expensive, the seller of those imported goods will have to increase the price, and that increase in price will affect the consumer. So import will become expensive, and the example will be the crude oil, which we're not making in South Africa. Then there will be fueling cost push inflation. So the seller will push the price that will land back to the consumers. Higher cost of imported production input will decrease domestic production and economic growth. So now remember that some of the production that you make in South Africa needs raw material that are not produced locally. Those material need to be sold or procured. For example, it could be in China, it could be in US, UK, whatever that products need to be procured for. It will be expensive for the producers, and if it is expensive for the producers, it means that they need to cut on the production. So if they're cutting on the production, it therefore means for the country that we are at a point now we are going to be reducing the production levels, and that will have a negative impact in the economy. So that takes us to the end of this question. Thank you so much for listening up until this far. We are now done with the section B, which is 80 marks. It is made up of a total of 5 questions. However, as I keep on saying to the candidates, that you are only expected, however, to focus on mastering 2 questions and knowing 2 questions, as you only need to respond on the 2 questions. Thanks so much. Please follow and subscribe if you're not part of my YouTube family as well as TikTok family. All the best as you're preparing yourself for the trials as well as the final examination. And goodbye.